All right, so these Tuesday sessions, as you guys know, start at 11 Central. Here we are in another week of these sessions. Remember, you have access to the recorded ones, same areas that you found access to the live ones. So, and the reason why I'm bringing this up is because last week I had an unbelievable response on how much value and how much people got out of last week's webinar. So if you didn't, or coaching session. So if you didn't watch it, make sure you do. That's just feedback that I got that I can give back to you guys, that it touched a lot of people, a lot of light bulb moments, so to speak. So we did a little of this, but with the introduction of the micro contract and the introduction on how gold has been opposite stocks and so many people trade the NASDAQ or the S&P minis, I think that to bring a product series session to everybody's attention is important, even if you want to trade. If you're not going to want to trade gold or its micro sister, you should watch it because it's provided a lot of value insofar as direction inverted to the stock indexes. All right. Another quote: if you want the fish, do you want the fish or the fishing pole? Some wise man said that a long time ago. I don't know who that was. So, and we'll talk about as we go through the year, we'll sprinkle in some other markets that we'll focus on as far as these sessions go. I do want to follow up at some point about last week's session because of the remarks and reaction we got. So we'll have a good follow-up session on the move coaching session that we did last Tuesday. But just before we jump into this, the content of today, just a recap of what's been going on over the last week if you're not in the trading room. Coronavirus is still a dark cloud and some pressure, albeit invisible pressure at times because stocks find a way to rally. But it has been something that has been an annoyance to the market. And today we had, an instance where gold goes up, stocks go down, and that fear relationship, similar to stocks and bonds when there's fear in the market. But with this corona thing, it's the unknown of how many more cases are there and how much is China lied about it. But even more important than that is the economic impact. Apple over the weekend talked about they're not going to meet their first quarter guidance, so their stock took a hit. You can only stay so strong when the top stock in the NASDAQ index gets beat up. So you got to keep that, we open up weak, but then we rally today. So it's just this coronavirus is less about the pandemic and how many people it's going to kill. It's not going to kill and wipe out humanity, but it's worried about the supply chain exposure that China has, the second biggest global economy, and all the exposure multinational companies, including Apple, has to when you shut down a country essentially for a month, going on maybe 2 months. What you need to alleviate pressure and to start, some upside, the beach ball underwater that the stock market always has been in, would be clearly the other side of this issue where you're getting diminished reports in the news, in cases, in deaths, and they can get on. Hey, if the first quarter takes a hit, it takes a hit. But I think the market could absorb that. It doesn't want any longer term problems. It's not like the whole world has got the same exposure as Apple does and some, many other big companies. So you got to keep that in mind. They don't like it. It's a nuisance, and they want China to get back to normal, or as normal could be. Now, that's important to go through in these coaching sessions, not just what's going on in the market because it changes week to week, month to month, but to understand that the perma bear who can't stand higher prices because they have to come off, they will come off. Those people won't be on the team finally. It's just been a 10-year short squeeze. So don't, on a longer time frame, be surprised when they shake off things like coronavirus or trade war. And we can go on and on, the Iranian tensions. This market wants to go up until it doesn't. And generally, when it doesn't, the people who've been playing the shorts have been squeezed out, won't be on the team. There'll come a time where we correct 10%, but most people won't be expecting it or looking for it. So it's a beach ball underwater until further notice. Now let's get into gold because it's an important market. Even if you're not looking to trade it, even if you don't trade it, you got to understand some simple things. Number one, the specs, the basic stuff most people don't understand. The PNF, what I like rotationally, PNF value, edge zone settings, and then what correlates with it. What kind of complex is it in? All right. So from there, tick value. This is simple stuff, but a lot of people don't get it and understand it, and you should. It's $10 a tick, and it moves. $10 a tick, and it's a mover. Now, the micro is just $1 a tick, and obviously it's going to move like the big contract, but it's 1/10 the tick value. The problem is the commissions are roughly, and this isn't necessarily the highest, the lowest. You guys that trade gold pop in what you pay around turn, but the commission on gold is roughly $4 on the big one and like $1.20 to $1.40 on the little one. Now look at the ratio. It's 2.5 to 1 here to here. So you're going to get more bang for your buck than 1 to 1 or even less here to there. But guess what? This isn't to make money. These are practice games. Skin in the game to make the team. So they're important games, but you're not going to get your ASS rearranged because you're trading a $10 a tick market. Anybody that starts in gold and never really had any success trading anything else, and you start with the big contract, it's crazy. It's too expensive of a contract to trade, and you cannot trade it small. Right? The smallest you could trade is 1. So in the big $10 contract, which is GC, by the way, the smallest you could trade it is 1. That's $10. That's going to get expensive real quick, especially if you don't know what you're doing. So there are people that'll jump into gold and trade it, and they'll have a little bit of success early. They just maybe got lucky, and then they get buried. They'll have $200 winning days and $800 or $1,500 losing days trading 1 lots in the big contract. So you're going to trade gold, start out with the micro. The micros introduced not too long ago are good because they're liquid. And what's liquidity mean? And same thing in the ES. The micro ES have saved a lot of people's careers or have jump-started a lot of people's careers to then morph into the big contract. And the micro versus the mini. Here, let me put this on Sim. All right, I got gold on Sim and I got the micro on Sim. Sim is the same. I just throw in orders just for example's sake for you. Obviously, the prices are going to quote the same, but you could see the liquidity is decent in the micro. What do I mean by liquidity? Well, you could pretty much get in and out one tick apart, pretty much. This is only $1 a tick. This is $10 a tick. Big difference. Now, the commission, you're not looking to trade the micro long term. You're looking to learn there with some skin in the game. Another thing that's important about gold, and you got to follow me on this because the language of it's important. You see how it's trading 1605.0, 1605.1. That's generally $1,605.10, 20 cents, 30 cents, 40 cents, 50 cents, 60 cents. But who cares about that? You're not looking to take delivery on this stuff. What you should worry about, dropping the decimal and just quoting the price 47, 48, 49, 50, 51, 52, 53. These are all $1 per tick. These are $10 per tick. You can see the liquidity difference, right? 60 by 30. This is going to be almost a tenth of that. Generally, not exactly. 9 by 2, 9 by blank. So this, when it gets fast, might not be bid offered every tick, but it's liquid enough to play. Another way to talk about liquidity is it wouldn't be tradable if this thing was 41 bid by 55 offer. There's nothing in between, and yet there's something in between on this. Does that make sense? That wouldn't be tradable. Wouldn't even be a viable market. But because you could pretty much get in and out a tick away, that's called decent liquidity. It's tradable. So 47, 48, 48 now goes bid, 49. That's the way I'd want you to quote it. And the reason why is it's easier for your brain to follow price. And then if you're working with someone talking about gold back and forth, well, it's easier to say it's, 48s, 49s. They just traded 50. It just spiked to 55. What are you going to say? 50 cents, 40 cents, 5.40 cents, 50 cents. Make it easier on yourself. You're not taking delivery on this stuff. Drop the decimal and quote 50, 51, 52, 53. It just makes it more intuitive that it's one tick apart. So when you're communicating it back and forth, that's an easier way to do it. There's no, what does he mean? 40 cents, 50 cents, because that seems like it's 10 cents apart. Well, technically it is 10 cents apart. This is 16.05 40 cents, 16.05 50 cents. Well, 10 cents has a tick in between. So don't get yourself involved. It's 52, 53, 54. All right? Quote it that way. Talk about it that way to other people. And this is 10. This is 1. The commissions, obviously, ratio-wise, there's more value in trading the big one, but only if you're consistent. You got to learn in here. You really do. So the money could add up. I don't care. Even if you've been successful trading other markets and you're looking to trade gold, start in the micro in the beginning, because no matter how much you have in your account, how successful you've been, when you lose $500 or $1,000, no matter how much money we have, $500 or $1,000, a lot of money is a lot of money, period. It's not how much you have, it's how much it could buy. So if you got $150,000 in your futures account and you lose $600, some people would say, that's no big deal. It's a BS. $500 could buy a lot. You're going to be pissed. And it's easy to lose $50, which is 50 ticks. Each tick's $10 in gold, because it's not only $10 a tick, but it goes, it moves. I'm going to show you a chart of it in a second. So this is buying 49s, right? You get filled. This is all sim. If you're trying to scratch it, you try to offer 49s. If I pull it and I sell 48s, I lost 2 contracts, 1 tick. How much? That's a $20. That would be a $20 loser. If I lift the bid, if I lift the offer, hit the bid with 2 lots, you lose 2 ticks, $20. See how quickly it could add up? Now, if you're short this son of a gun and it spikes 5, 10 ticks, and it does, you're in trouble. That's why it's hard to trade this market cheap, because it's not cheap like oil used to be. Take advantage of the micro. Now, this is what's important about the micro. Don't chart the micro and look at the footprint of the micro. The only thing you do on the micro is put orders in and out. All your analysis on charts and footprints and edge zones and everything should be done on the big contract. Same thing for E-mini traders. Anybody trading the micro, you should be looking at the big contract for charting and footprints and number bars and everything else. The only thing you're doing is entering orders on the micro when you're using it to learn. All right, so we covered the micro commission, the big contract commission, the tick value. Now the settings, P&F. We'll go to a chart. As most of you guys know, if you don't, you go back to watch some P&F videos I've done in and on the website, Point and Figure. Most of you guys that have come through me start using Point and Figure instead of time or range and everything else. This ain't going to be a Point and Figure webinar, but Point and Figure, the number equals how many ticks up. If it goes up 8 ticks, if it's an up bar and it goes down 8 ticks, let me do this again. If it's an up bar and it goes down 8 ticks from whatever the high was, boom, it'll create the next bar. The smaller the number, the more bars you're going to have. So you want to adjust the point and figure according to how much the market moves. The faster and the more prices a market covers, the higher your P&F. That's the rule of thumb. 8 is a pretty decent number for P&F. I use 4 in the ES mainly, 8 or 10 in the NASDAQ, but 8 is a decent P&F, and I'll show you that on a gold chart. And again, showing you rotations on gold. Just remember the rule of thumb for point and figure. The more prices a market covers, the higher your P&F would be. So the 10-year note would have a small P&F number of like 2, barely moves. Make sense? Because if you have a P&F that's way off, then you get this like too much noise. It doesn't look right. All right, so P&F, as far as settings go, 8 is a good start in gold. As far as edge zones go, I'm going to show you this on the settings, but 987 I like as a percentage imbalance. And I think I have it set, we're going to look at this, at 29 for min diff. I'll show you that on the settings in a second when we go to the charts. So that's how you could set your edge zones to the charts. Now, if you guys have Sierra, I've sent chart books to people, and I don't want to send a chart book every time I have a chart. If you have Sierra, it's easy to build your own chart with it. Just duplicate one of your charts, put gold in there, and change these settings. It's a lot easier than me sending it to you, sending me an email to ask me, then me sending it to you, and then you pulling it in. It's not hard to create a new gold chart. For chart books, that's fine for an entire layout, but for each individual chart, everybody should be able to build their own. Now, here's what's most important. What markets to watch? Other markets to watch. In other words, a complex that you create that have a cause and effect or a relationship with each other. Now, I wasn't asking that as a question, Raj, but I'm glad you answered it. So the markets to watch would make sense that silver would be one of them, right? Remember that movie Easy Money when the lady comes out or he's on the phone on that big cell phone on the boat, and he says, silver's down, call the Lone Ranger, he'll cheer him up. So that's silver and silver futures. It was probably trading $2 back then. Now it's like a $15 or a $18. I'll show you a chart of silver in a second. An ounce. Now it makes sense why gold and silver relate, but not exactly. Silver has some industrial qualities, which makes it decouple sometimes from gold. They're not going to use gold in any kind of industrial construction, but sometimes they use silver and certainly copper and then aluminum, right? The cheaper the metal, but the efficiency of its use, they'll use. But silver has mostly the precious metal quality like gold does. That's why they're obviously going to relate. If you get a strong gold market, you're generally going to get a strong silver market, not too different than the NASDAQ and the ES, okay? Silver. Another one that you might not think of is the euro, the 6E. Why? Let me clear this. The euro. Well, because gold often has an opposite U.S. dollar. So when the U.S. dollar tanks, generally people want to go into what? They want to go into gold. They're not, as I'm talking about on bigger moves, people are not confident in the U.S. dollar, so they want to pile their assets into gold. So gold prices will go up if the dollar gets hit. So why is the euro a good thing to look at? Is because the euro opposite the U.S. dollar, stay with me on this, it's going to be same direction as gold. Not a lot of people have ICE or the dollar index to actually look at. That's why the euro is a great replacement. If you can't look at the US or the DX, which is an index of the dollar, the euro is going to give you a nice mirror image of the dollar because it's the euro versus the dollar. And the euro is the biggest currency. So if the euro is strong, generally gold is strong because the dollar is weak. Make sense so far? Don't think about that too much. Just think of the 6E, same direction as gold. Gold, similar direction as silver. Now, gold will be opposite, all right, ES and some stock indexes. Why? Because of fear. People get afraid, something going on in the market, trade war, coronavirus, anything. People do what? They sell their stocks and they buy treasuries and now gold. So gold has that flight to safety element to it, or flight to safety quality to it, just like bonds would, 30-year bonds. People want to go into somewhere safe when the you-know-what's hitting the fan and people are getting out of stocks. They want to get into U.S. treasuries and precious metals, something physical like gold. So you'll see an inverted relationship between gold and the stock indexes. Same thing, though, if people rush back into stock indexes, they'll step on gold a little bit, right? You're going to have, if it's going to go down when, or if gold's going to go up when stocks go down, gold's going to go down when stocks go back up. Cause and effect. So when we talk about other markets to watch, no matter what you trade in today's class, so to speak, is about gold. Hey, listen, know the basic stuff because most don't. And it's $10. That's expensive. Look at the micro. It's only $1. It'll get pricey with the commission, but you're not there to make money. You're there to learn how to trade it, and the money will come. If you're trying to learn it at this rate, you're going to have a bumpy ride. You're going to have a very long emotional roller coaster trying to learn to trade gold consistently in a $10 per one lot environment. The micro is liquid enough, cheap enough to get the same sense of what you're trying to do. And then knowing all that and this, and getting a sense on playing with the PNF and the edge zone settings, which I'm going to show you in a second, and then other markets to watch. You've checked some boxes that most people will never get around to. They are barely take forever to find out the symbol of the damn thing. What's the symbol? GC. What's the symbol of the micro? It has 50 times. Once you get past all that. Now, one other thing that's important and I didn't put in here is the months it trades. It doesn't roll every month like oil, but it doesn't roll every quarter like the ES and the currencies and the bonds. It rolls every other month. And right now, the front month is April, which equals J. Every other month it rolls. Rule of thumb of knowing when to roll when you're a futures trader, whatever month has more volume in it is going to be the front month. In the middle of the previous month, like the middle of the previous month, which is middle of March, they'll roll out of April into June. And June equals M. Every other month it rolls. So it's going to roll 6 times a year. I'll do the math. Oil, as you guys know, rolls every month, 12 times a year, but the currencies and the treasuries and the stock indexes roll quarterly. Right now it's in April, mid-March, close to mid-March, it'll roll from April to June. And again, the rule of thumb is when you start to see the June get pretty close to volume of the April is when you got to make the switch. It doesn't roll in April. If you're still trading April in April, we're going to have to get you a doctor's appointment. So all this stuff is easy to understand. These are just, but they have to be understood. You know, one of the things that I did a live event one time, we had a broker come and talk, and he gave out this pamphlet to people, and it wasn't a salesy thing. It was just a sheet of specs, symbol, tick value, maybe rough commissions. It was simple stuff. Guy put it up on his desk and he said, this is the most, helpful thing I look at all the time, the simple stuff. What is a tick? You could search that stuff online. I get it. But a lot of people don't know what this is. They don't understand how expensive this could get. certainly don't know this, and they certainly don't know this. So let's get to some charts of this stuff. Let's get out of this. Now I just pulled these charts over and we'll go through it. This is silver on the left and this is gold on the right. Like I said, 8 PNF. And if we blow this chart up, you could see all our green lines, the edge zones. So you right click, go into chart, or go into studies rather. You click ET edge zones right in here and click settings. This pulls up what we want. When you're watching this on recording, you could stop this screen and take a look at it to make sure yours match up. Now, 987, 39, I have it set. Now, if you change this to 9, watch what happens. Too noisy, all the greens appear because that's too low of a number. If you change it to 99, barely anything shows. So you want to find a sweet spot of, and that's what's nice about these edge zones is you don't have to change them a lot, but you want to find not too many, not too few support resistance. You got to know the edge zones come from where the tempo picks up. Goes up fast, goes down fast. Green if it goes up fast, red if it goes down fast. But all this stuff is important on the Sierra edge zones you get from Emoji. It's on my website. Go under software. You guys will, if you don't have edge zones, go under software on my website and go from there. But that's the settings because most of you have edge zones or that feature on Sierra charts. So these are the settings and how you could change them. I'm going to go back to 39, and that's a minimum. We used to be called min diff in market delta. It's called min bid ask delta in here. And you could see most of the, obviously in a rally, you see a lot of greens that come in. Like I said before, I like the ones that are drawn across that tend to work a little bit better for support or for resistance. You know, when you get a small one drawn across and you go through it, that's important to know that maybe there is some upside, but not to use it as great resistance. And you could see that these levels are pretty good even in a market that moves. Here's silver. Let's expand this out. Now silver, and I don't want to go over too much about settings and everything else because silver is expensive. It's $25 a tick per one lot. All right. So the settings for it, 4 seems pretty decent, right? Showing you some boxes, rally, boxes, pop. But do you see how you got a strong gold market today? You got a strong silver market today. Makes sense why gold and silver would chart similarly. What's important is, let me bring this down and bring this over. When do you get them to diverge, right? When do you get like silver to make a higher high in here? There's one other thing is market hours. I forgot to tell you. It's an important spec. Let me tell you now. Market hours for gold is 7:20 to 12:30 Central Time. Now it's open before and after that, but that's like the 8:30 to 3:15 Central Time open of the stock indexes. 7:20 to 12:30. That's like the 8 o'clock for oil to 1:30 Central. That's important to know. Similar times, I think silver closes at 12:05, but similar times in silver. But if you look at, so silver and gold are open pretty much in this area right in here, right? And you might see a little higher high, but you don't get a higher high in gold, and it comes off. Don't look like much, but it is 10, 20, 30 cents. 30 cents or 30 ticks, that's $300 per one lot. See how quick that could add up? So you buy this thing at 40 and you still haven't, and it's trading 15. Remember, I dropped the decimal and quoted across. That's 250 right out of the gate per one lot in the big gold. I wouldn't advocate trading this guy, but I do advocate watching it if you're going to trade a lot of gold. Try it in a micro. I'm just reading some of the comments that are coming across. So now let's, again, easier ways for you guys just to make sure not to be afraid with Sierra or any platform that you guys are using. There's always shortcuts to say, if you want to build, you got these studies that you want to keep in it and you want to build. I got a Euro chart on another screen, but you could take a look and let's just say you want to duplicate it and you don't have it. You go to chart, you go to duplicate chart, and it brings up the same damn thing. You right click, chart settings, and now you just change the symbol. You got to know that oil's at the NYMEX, you expand it. Crude oil's right in here, expand it. You should know that crude oil is in the, what is it in? April? It's just about to roll into April, isn't it? Oh, what do I have in my other chart? It's in March still. So that's how you get to oil. But I don't want to build an oil chart. I want to build a Euro chart. So you go to CME, you go to Euro. I don't want to turn this into a Sierra how-to webinar. But I also don't want someone to ask me, hey, could you send me that chart book? When you see how easy it is here. Oh, I got things popping up all over. All right, what am I looking for here? Where's the Euro? I just went over it. This is the market I used to quote and work at, Euro dollars. That's not it, but that's took up half the trading floor in the upper trading floor. Remember that, Paul? I see Paul's here. Used to be a big Euro dollar trader. They bring back memories. Here it is. So you know this is in the March. Hit OK, fills it in. And then you look to change your settings to get a sense of what it's doing. So this is on an 8 PNF, probably too much. So you want to bring it down to a 4 is better in the Euro. This is the 6E. Way too many edge zones, but that makes sense because gold, this probably should be brought up. Gold is not as liquid as this guy. So you bring this up. I think I have it 74, I think. No. So this is the Euro. And this is pretty much today. And I want to get into the Euro, but that starts at 7:20 also, till 2 o'clock. And you could see it's not tick for tick in a relationship, but you could see the strength that it had pretty much after 8 o'clock. Strength gold had pretty much 8 o'clock. So they are charting similarly. You could see the selling that it had about an hour or so ago, selling that came in gold a little bit. This doesn't look like much. That's a 40 tick move lower. And by the way, for oil, it's rolling into April tomorrow or this week. So be aware of that if you're an oil trader or have oil up and you watch it. Now, what's interesting is when I traded gold back in 2006, 2007, and a lot less, but still some in 2008, it used to relate tick for tick closer to the Euro and crude oil. So because there was a lot of cross commodity funds, oil goes up, gold goes up, and there was a lot of mixture of money that went into both products. But you could do your analysis to show and look at the relationships between these markets and build your own complex out. You got data for bigger gold companies, chart it next to gold. Pull things out to find where your edge is trading this product. Now, like I said at the beginning, even if you don't want to trade gold, it's become important to look, and you'll hear me and Dave and Tom talk about gold, the yen, or talk about gold like we talk about yen and bonds, that opposite indicator. Let me move these things off for a second. Here's the dials that I have. I still haven't pushed them out. Don't ask me just yet about these dials for Sierra. But you see gold right in here. It's important enough to put on here because if I'm long the S&Ps, I want to see this thing get hit. I want to see this thing turn left. I want to see the bonds go left, which means go lower. Intuitively, the dials help us understand strength and weakness. And this is oil. So the whole point of, trading and watching markets that correlate is, are they doing what they should do to fuel your position, your bias, or not, to keep you comfortable or uncomfortable objectively, instead of always talking ourselves into our position. It's so easy to look for bullish signals when you're long, right or wrong. You guys know that. If I had you guys physically in a room, every hand would go up. If I said, isn't it easy to see bullish signals when you're long? Everything's bullish but price. And so you're still bullish. So you got to always work on objectivity by saying, you know what? I'm long gold and the ES are getting strong. They're getting, they're doing what they're doing right here, this rally right now. I'm not comfortable being long gold if I'm long gold and I see this start to pop. That's an objective reason not to be bullish just because you're long. And that's why talking about once in a while these other markets, I do webinars all the time in a general and a detailed event on market relationships, correlations, and how important it is to watch multiple markets to find value. But you also have to understand these markets too. You should understand that it's $10 a tick and a big move in gold. Let's take a look though at gold specifically, because that's the one we're talking about. And same things apply. Congestion boxes. In fact, if we take this out to 12, on this chart, it kicks it over. It gives us a little bit more of a sense of consolidation and a breakout. Are we that surprised that these tops got taken out from 3 o'clock this morning after, so many times? Are you unaware that this is happening and you're an ES trader? This is when we started getting hit. I think it was below, what was it today? 72? No, 70. Once you find a comfortable read, P&F wise, you shouldn't have to change it a lot. And remember, a lot of this market action's overnight. You know, 8. What do I have on? I got 2 gold charts. I got an 8 and a 4. Let me change this guy back to a 4. Let's see what my other one is. 4. Oh, I keep doing that. Let's go to there. And that's why I like a 4. See, gold has gotten a little bit more liquid, like oil, over the last 2 years. You looked at a gold dome 3-4 years ago, look a little different than today. Look more like the micro looks. So it's gotten more liquid. So this gives us a sense of what it's done since 9:30 this morning, Central Time. Don't make gold something you like to trade just because it's moving. Make it something you like to trade because you can get a good read on it. Maybe it fits your personality a little bit better. It's going to break out. I mean, this is an 80 tick move from here at 10 minutes to 10 Central in 30 minutes. That's $800 per one lot in gold per the big one, right? It's $80 in the micro. I'm not saying buy it here, sell it there, life is good, but you see the risk in there, right? I'm not advocating people trade this. I'm just giving people education about it. Should be familiar with more than just the market you're trading. You should have a good sense of what these other markets cost on a tick-to-tick basis, even commission, and have these charts up on your screens. Even if you don't watch them a lot, you'd be surprised at what could help you that you weren't watching before. So I was asked about these edge dials. I'm still in a holding pattern with them as we're working on the yen. I'm not a big into software guy because of the support aspect of it, and I don't want something that I got to worry about supporting. It'll make me throw up. And so it's got to be tweaked. The edge zone, the other thing I'm asked is about these edge zone audio. So I did a highlight on them today. And I asked people, a lot of you guys have Sierra. Get it. Go to the website. If you don't have it, it's like a $70 one-time fee. It's not recurring. It's one time. If you don't have audio to your edge zones, it's not the visual. It's just the audio. What's cool about it is when you go to it, ETG audio, you could put different names. Look at this. So you got female names and male names that have different accents. And so a different market could have a different accent. That's what I do. And so the NASDAQ will have an English accent. Don't ask me why. Female is selling. Male is buying. And here's why this is important. And people talk about distractions. This is less of a distraction. How much help do you have in your everyday life because you're able to use your sense of hearing? You guys are all here. There'd be no value if you guys didn't listen to what I was talking about. The visuals are important, but the sense of hearing is important. We're hunters. We're hunting for good location. We're hunting for deer. If you couldn't hear, you wouldn't be as good of a hunter. You rely on your ears and what you are trying to listen for. Something doesn't sound right. And yet we ignore that sense completely. And I know there's other companies that have the volume. They have squawks for this, squawks for that. Keep it simple. Female voice comes in, selling comes in. When you have visuals, you have to be looking at it to see it, right? With sound, you don't have to be looking at it to hear it. That's why it's such a powerful sense that we take for granted in our everyday life and in our everyday trading life because we don't even use it. Use it when you drive. Use it when you do everything that's important and risky, except your trading. And so you guys know I don't use these coaching sessions or trading rooms to sell people things. It was developed. It's inexpensive. It's 70. If you got it, it works. Use it. Get it. If you have Sierra, you're crazy not to. Where the heck is it? There, I'll show you. Someone's asking, then I'll show you. And by the way, the recording of these are on the website in these green boxes. This was last week's and you'll like it. But anywhere software, most of the software, I'll send you to Emoji so they can handle the support. But right here, Edge Zone Audio, here inside the charts. Get it. Due to lifetime, I think it's $70. And I'm telling you guys about it because I'm asked about it. And I think if you haven't and you set up and you find after a month or so you don't like it, it was 7 ticks. Not a month, forever. As Ken, good to see you, Ken. He brings in, good point, on the big holiday in Asia. There's a seasonal component to it, and I'm glad you brought that up. There's a seasonal component to oil, seasonal component to some of the energy complex, seasonal component to precious metals. Any questions about it? And I had the idea to do this today because of some people trading it. They like it, but some of them are risking too much. They're jumping into the big contract. I said, wait a second. Break it down into the micro, get your settings right, understand the risk involved, understand what you're looking for. I mean, just real simple stuff. I don't want to get lost in the weeds and talk about what do you think happened? What does a gold chart look like when this, I mean, it's too late after you see it, but you know, if this market rallied like this, gold probably got weak. And then you look at gold and it did. So if you were bearish and you were looking for moments to sell gold, maybe you were going to get in a better spot, better timing because you've seen this start to pop. And you're understanding how to read the market. Very important. Anybody having trouble with gain on Sierra? I think if you got gain with Sierra, you got to get away from it. Someone's having trouble and they're asking me to ask the group. Is anybody having trouble with Sierra using gain as a broker? So a couple things from today. Know what's driving us. It's still this corona. It's still a beach ball underwater. We seem to rally amid a lot of weakness that we get. We end up coming back. Watch last week's session. A lot of great reviews on it. And then this event give you more of a starting point to really dig into gold. If you're trading it, trying to find better rotations, and understand it's a breakout market. And it's too expensive to jump in right to the GC at $10 a tick. I don't care how much is in your account. You wouldn't be allowed to trade gold right out of the chute if you got hired by a prop firm. So they wouldn't let you do it with their money. Why are you doing it with your money? Any other questions? All right, good. All right, let me stop the recording so we don't go on too long with that. If you guys got any questions, I'll stick around a couple more minutes.